All right, everybody. The second full week of November is over. Let's jump into the market recap. Monday's over, and everything was down. Things were led by tech stocks that are down more than pretty much anything else. AMD, Apple both had big down days. Uh, but it wasn't just tech; it was across the board. The Dow was down 600 points. S&P was down almost 2%. Small cap stocks were down. Everything was down. So just one of those volatile days where there was no real news, no real reason for it. We'll see if we get more of the same tomorrow or if we get a little bit of a bounce back. It is Tuesday, November 13th, and market started up a little bit more than 1%, but gave it all back by the end of the day. Not a big volatile day in any case, but people were probably hoping for a little bit of a bounce after a big down day yesterday and thought they were going to get it, but then didn't end up getting it. There was some good news, some what seemed to be progress on trade talks with China, and oil prices going down, which usually is a good thing for the economy. So we'll see what happens there. But otherwise, a bit of a nothing burger for the day. It is Wednesday, November 14th, and we had another day where stocks started up and ended down pretty much across the board, down a little less than 1% across most of the major indices. Brought us down to 25,000 on the Dow. So not even very far below our all-time highs, but definitely another down day. And speaking of down, Bitcoin is down into the mid 5,000s, which, if you remember, the big mania last year over Thanksgiving and Christmas was really where it was at back before that. So we're back down at levels we haven't seen for more than a year for Bitcoin and crypto. So that looks interesting. We also got a speech in Dallas from Jay Powell, the chairman of the Fed, and give us a lot of insights on what they're seeing for the economy, which the market takes pretty seriously. And I'll break that down in a little more detail at the end of the week here. It's Thursday, and finally we get a little reversal. We get a day that started down but ended up, and pretty substantially up. 1% on the S&P and almost 2% on the NASDAQ. So stocks that were having a bad week are now having a better one at least. And economy, there didn't seem to be a whole lot of news coming out for the stock market to move on. There were a couple of reports from different Feds, Philly Fed and New York Fed, and they were a little bit mixed, but we should expect to get some mixed reports with unemployment at 3.7%. It'd be normal even to see a couple of bad reports. That wouldn't necessarily be a bad sign for the economy. We'll expect some reversion to the mean, maybe trend unemployment a little closer to 5%, which the Fed usually considers to be the natural rate of unemployment. So if we got mixed data coming in while we're at 3.7%, that's a pretty good sign. And expect to see the stock market react positively if we keep seeing that kind of mixed to good results. It's Friday, and a day that started down across the board ended mixed, mostly up, which was a good sign. And positive end of the week. What started out looking pretty grim. The only big news that I saw come out was we got a couple of proposals, one from Bernie and one from Elizabeth Warren, that should start making people think that it looks like the Dems are going to beat Trump in 2020. That might be a big negative for the markets. As you probably got a sense for there, it was a pretty wild week. It started way down. I actually had somebody on Wednesday ask me if I thought the market could go down another 1,000 points from here. And I said the S&P 500 or the Dow. He said the Dow, and I said, of course the Dow could go down 1,000 points from here. It's just 4%. I said, oh yeah, it's not 2,000 anymore. Where that means it moved pretty far. But all in all, a lot of 1% and 2% moves this week, but it ended up not that big of a swing, with most asset classes down between 1 and 2 or 2.5%. Pretty decent move on the Treasury. 10-year Treasury yield actually went down a little bit closer to 3%, which means it was down 4% week over week. So decent swing. There was news coming out all week. None of it seemed huge. We're starting to get some earnings reports, seeing what companies are doing. talking about their plans for the new year, but again, nothing really earth-shattering. We got a couple of must be political grandstanding comments. One from Bernie Sanders, no surprise. If you ever heard me talk about share buybacks, you'll know that I think any piece of legislation built around curbing share buybacks is absolutely ludicrous. And then I'll get into the economics segment a little more, but Elizabeth Warren was criticizing the Fed, and totally baseless, in my opinion. Moving over to the economy, most of the numbers coming in look good. Small business sentiment still strong. Budget deficit continues to balloon. $100 billion for the month of October, so obviously something to keep an eye on. CPI was 0.3% for the month. That's higher than projected. Core CPI was also higher than projected, so seeing some inflation. Jobless claims still basically at the lowest level since the 70s. Really strong retail sales numbers driven a lot by cars and gas, but a strong number nonetheless. And then Neil Kashkari of the Minneapolis Fed came out and said he does not believe we need any more rate hikes right now. He's not a voting member of the Open Markets Committee right now. He will be in 2020. But good to see that insight, and glad that at least some people are thinking that way, because without a lot of inflation, they should at least be talking about whether we need any more rate hikes right now, or whether they should let the inflation catch up for a little bit. Last big one's Jay Powell, the chairman of the Fed. He had a big press conference in Dallas, and I listened to it, so you don't have to. A pretty big announcement. The Fed is going to move from four press conference FOMC meetings a year to 8. And that's a big deal because the press conference meetings are when they almost always move the rates. Technically, they can move them whenever they wanted to, and their hands aren't tied. They could always move rates, but they always do it during the 4 times a year when they have a press conference, so they can explain what they're thinking. So they're moving to 8. That means we could get more regular rate shifts, which just gives them more flexibility. He is very happy about the state of the economy. He's very clear about that. And he said their number one goal is to extend the recovery. So keep unemployment low, keep inflation low, but extend the recovery. He said 2017 was a good year, but he's seeing a global slowdown, and that's a little bit concerning. Seeing 2018 not be quite as good across the board. Credit spread, so the difference between where treasury yields are and where companies can borrow, has been tight. He doesn't see that as necessarily a good or bad thing. It's just a thing. He didn't have a lot of comment on it. He was asked about what the Fed learned in 2008, and he said he found that financial stability is necessary for economic stability. I thought that was a pretty interesting insight, to know that they are really placing a premium on financial stability. Maybe means that they're seeing banks as quote unquote too big to fail, and that's the way that they plan to continue to view things. He did say he thinks the U.S. is on an unsustainable fiscal path. He sees that as a medium to near-term issue, but it's not the Fed's lane. He was asked if the Fed would ever deliberately invert the yield curve, and he said maybe. He said, it depends on the facts of the situation. He certainly wasn't going to say that they would not raise short-term rates higher than where the long-term rates happen to be. And of course, that's important because the Fed doesn't really control the long-term rates, the 10-year or the 30-year rates. They're moving the overnight rate, and yeah, that does affect the longer-term rates for multiple reasons, but they're only really controlling the short-term rates. He reinforced at the end that he sees a lot of strength in the economy, and that gave a little shot at Trump, and said the Fed is going to continue to be a nonpartisan institution. They're going to continue to not be affected by politics, and he reiterated how valuable that is, and how central banks that aren't nonpartisan end up not doing a very good job. In other news, limits for 401k, 403b, 457, and IRAs, contribution limits will be going up in 2019, $500. So you'll be able to put $19,000 in your at-work retirement plan, 401ks, 403bs, and you'll be able to put $6,000 into an IRA or a Roth IRA starting 2019. So don't forget to adjust your contributions if that's something you do monthly. Also, have on very good authority that Matt Whitaker, the acting attorney general, is just as retro when it comes to weed as his former boss Jeff Sessions. That's definitely a negative. I wonder if people realizing that drove some of the pretty big downturn that we saw in weed stocks this week. But definitely not something that people that were happy to get rid of Sessions for that reason would be excited to learn about. And finally, the chess championship is tied up 3 games apiece. So Fabiano Caruana, the American, is got a fighting chance against Magnus Carlsen, the 4-time, I think, reigning champ. As a reminder, they play first 1 to 6.5 points. So they're just about halfway done with the match. Thank you for tuning in to this week's episode of Fed Watching. And thank you to the dozens of people that listened on YouTube last week. And just a reminder, you can also find this everywhere you download podcasts, so iTunes Podcast Store, Stitcher, wherever you like to listen to them if you don't have time to pull it up on YouTube.